Hi, folks. Dan Bird here with the Daily Scan for Thursday, the 15th of May. And it is about 1:30, so the market's still open. I've got things to do tonight, so I'm going to do a quick video and post it. It's going to still drop at 7, so I don't know what's going to happen between now and then, but it looks pretty interesting right now. So let's take a look. As always, I am not a financial advisor, so everything I say is for educational purposes only. I have not updated the market bias chart yet, but I will later tonight, so you can come back and see what's going on with that. But let's take a look at the S&P as it stands right now. Clearly, that's a V bottom if I've ever seen one. So this is looking more and more like 2018. We are now at 59.15, and I think we are heading towards 6,000. So let's draw in a line at 6,000 just for fun and see if we get there. 6,000 is right about here. So there's 6,000. Significant resistance way back here. By the way, for those that use stock charts to draw a straight line like this, I didn't know this for a while when I first started using stock charts, but you just choose a trend line, choose the color you want, whether you want an arrow on it or not, and then you hold the control key down and pull it across, and it will keep it perfectly horizontal. Or if you want to do it up and down, same thing. Keep the control key pressed and do a vertical line. We'll do the same thing. But that's where 6,000 is right there. And then, of course, the high is right up here, 6,150 or 6,100, let's call it. But 6,000 is a good target to shoot for. We're not far away from it. So we could, theoretically, we could get there by tomorrow or sometime next week. Doesn't look like max pain is going to play out this month at all. It's going to be way off, actually. So that's why max pain is just an indicator of potential direction. It does not mean the market's going to go that way. So right now it is defying all of the market makers' odds. We actually had a gap down in the morning. I'll show you that in a minute. And now we are heading higher. Now, by the time the market closes, it could come back. But if it continues to do this up until the end of the day today, that is one more sign that Wall Street is buying, especially in the afternoon, after potentially selling in the morning. So let's take a look on the charts page. I just want to show you that before I go back to the other charts, including Bitcoin. On the charts page over here, we'll take a look at the 10-minute charts. And this will give you a good sense. This is something to take a look at during the day. So here we are, sold off in the morning, and then from 11 o'clock, I don't know if Powell was speaking or what was happening that caused the market to go up. It went up and is sitting right up here, pulled back a little bit in the last 10 minutes or so. But look at the aggressive sectors. Technology, financials is lagging. Technology continuing to go higher. Discretionary is up there. Communication services is now catching up. Industrials is still up there. And if we look at the defensive sectors, healthcare down, staples, energy, utilities, materials, all of these down for the week, kind of making a little bit of a comeback today. In fact, there's something else interesting I'll show you in a minute on the dashboard. And then the intermarket relationships, growth versus value, still up there. Discretionary versus staples, technology versus the S&P, and semis versus the NASDAQ 100. So if we go back and look at the dashboard, you'll see right here, so far today, and this is live. So at this particular point, it's about 1:40 Eastern time. We've got the three defensive sectors that are carrying the market higher right now. And discretionary is near the bottom. Technology is close. Communication services is near the middle. Technology is in the bottom half. So that's not a good sign that the defensive sectors are carrying the market higher. That could be rotation, but regardless, it also could just mean that everyone's participating. So you can see here the advancers right here, the ones that have the most decliners is energy, which is at the bottom of the list right now. So that's pretty interesting. Cisco reported yesterday, and you can see on the top 10 list, Cisco is actually in the top 10 of the top 10 right here. Cisco looks like it had great earnings. If you look at each of these, this one here is just continuing to go higher. Eaton went up today. NetEase, that looks like reported today. NetEase blasted off from about 107 to 127. Solar Edge, I talked about this earlier in the week. It pulled back and then took off again. It had a hammer candle yesterday. Hertz trying to move back up. Cisco, second level, nothing. Groupon was already up there. IBM continuing to go higher. IBM looks very strong. In the bottom section, we've got Baba. We've got HIMS now starting to move back down. And what else? TME was on the top yesterday, so it's just taking a break, going sideways. ACMR is another semiconductor stock, and it had a nice run. It's just basically taking a break today as well. So at the top of the industry groups is water, telecom, tobacco. That's a defensive. So utilities, staples, healthcare. So those are all defensive areas. And then for the aggressives, we've got telecom, fixed line communications, computer services, and mobile telecom. So not really the growth areas. It's not the internet or software or things like that or semiconductors, but it's the other components of the aggressive sectors that are moving higher today. All right, let's take a look at so I'm just going to go down the daily routine. So this is the first one at the top of the daily routine. You can see we are right here, heading back to the highs, and we are now above the next Fibonacci level. So that's good news. That means there's really not too much resistance other than all this congestion back in here. That's not too much that's going to keep us from getting back to new highs. I think we are going to make it for sure. The next one is the big picture look. Oops, trend analysis I'll look at. So big picture, again, there's the V bottom. Really nice. Look, this is a weekly chart, so this will complete tomorrow, but for the week, it looks very strong. I missed the trend analysis, so I'm doing these for the S&P, by the way. So long-term trend was just about to go below zero, but now it's curled back up. And the medium term is definitely above zero. So all of this is bullish. All of these things will be very bullish today. Keltner charts to see how far we are from the extreme, and we're pretty close actually to the extreme. So 59.50 right there is the 3x ATR, 3x average true range. So I expect to see some resistance when we get there. It could potentially just continue to go higher from there, just follow this up, actually pull it up with it. But that's something to watch out for. It could easily get to 6,000 before it reverses or consolidates. So everything's looking really bullish right now. Let's look at breadth analysis. So again, the advanced decline lines are looking really strong. NYSE, large cap going up, mid cap going up, small cap going up, not taking out their previous highs. Large cap did, but mid and small cap have not taken out the previous highs, but they are moving up and they're above the moving average line. So that's all good news. Let's see, McClellan. Let's look at the McClellan oscillators. New York Stock Exchange. And what this is a moving average of the advanced decline line. So anything above zero means there are more advancers than decliners, and it is clearly above zero and staying up there. That's the important part. Here's what the market looks like. And the bullish percent index also is above the overbought territory. It's at 74% right now. That's very high, but it just means that everything is bullish. So most of the stocks in the S&P right now are in very bullish configurations above their 50-day moving average. So I showed you that yesterday. and this is continuing today. So it's staying very bullish, really not giving any indication that it's ready to roll over yet. The VIX today, see where it's at, actually went down to 18. So started off the day high, but then went back down. It's still really in that neutral zone, though. It's not in the area where the bulls are in control yet. So you can see right here, but it is ticking down a little bit more. S&P is going up. 10-day moving average of the put-call ratio continues to go lower. So usually when we get to a top is when this goes down here below the 52 level. And we're not there yet, but getting closer. 10-year dropping today. So that's good news. Actually, I want to look at one other thing. Let's see. Risk on, risk off, high-low charts. These are the new highs for the S&P. Pretty much equal. This is the Association of Investment Managers. So they are becoming more bullish, not in danger territory yet. So certainly we have more room to the upside that we can go. All these charts are on the website for subscribers. You can take a look at them over there. Here's the 50 and 200 day. And you can see this is the 10-day put call ratio steadily going down. That means more calls being purchased. 20-day stocks above the 20-day are up in the overbought, but they're not actually above it yet. 50-day is at just about 70%. So 70% of stocks are above their 50-day moving average. And the 200-day, which I showed yesterday, was at 51%. Today it's at 54%. So that continues to be bullish. And then the bullish percent index down here. So all of this continues to show a very bullish tendency for the market. What I wanted to look at is in this middle column, liquidity. We'll see how that's looking. And liquidity, of course, is important. The dollar has moved up slightly. This is a weekly chart, so it will move a little more slowly. But here's oil. Ticked up slightly, but still on a downtrend. Same thing with commodities. 10-year yield went down today, so this will probably start to move down. We'll see how it ends on Friday, but this will probably start to tick down. So liquidity is still just fine. Global liquidity is fine, and we're not going to see a crash if we have good global liquidity out there. All right, let's take a look at the daily scan. So let's close this. And before I do this, I want to look at a particular stock. Actually, it's not a stock, it's a industry group that someone asked about, which is home builders. So home builders are home construction right here. They were making a comeback, and today it has rolled over. This is the daily chart. So it's rolled over significantly just today. So it looked like it was potentially in position for a character change on the chart, getting ready to put in, it's already really got some higher lows, but it needs to put in a higher high. But right now, this could maybe is the start of an inverted head and shoulders, which would send it back up here if that were the case. But today is not looking so great for home construction. So let's take a look at the stocks in the home construction area. And you can see here, this is just for today. These are ranked by percent change. So these are the ones that have moved up the most today. Comstock Holdings, Lennar is up there. Beazer Homes, this is just for today. TriPoint, Toll Brothers, NVR, KB Homes, DR Horton, Hovnanian, they're all Pulte, all near the top, all positive for the day. For the week, I think they might look a little better, but for the week, the only ones positive are Lennar, Century, Lennar, two Lennars, Toll Brothers, Beazer Homes, and Hovnanian. KB is just slightly negative for the week. NVR is slightly negative for the week. And Pulte is down here too. So that gives you a sense for the week, but you can see that they have pretty low technical scores, which means they have basically been trending lower over the last 6 months. And if I just take a look at Hovnanian real quick, person didn't ask for any particular stocks, but if I look at Hovnanian over with a weekly, it's actually kind of going sideways, but over the last couple of months, it's been trending down, trying to make a comeback right there. If you look at the monthly chart, it actually has been trending up ever since 2020 overall. From a monthly perspective, it doesn't look that bad actually. So it might be hitting the bottom and maybe getting ready to trend higher. Summertime usually is a good time for home builders, but I think it will all depend on interest rates. And if mortgage rates continue to come down, then home builders should do better, hopefully. If we look at right here, this little button is the seasonality for home construction. And make this a little bigger. Let's go back 12 years and then move everything back one, because we're only up to April. If I looked at everything, then the last 8 months are not going to make any sense. So here's what home builders look like. May is a decent month, but the summer months, interestingly, are actually the weaker months. October and February are the weakest, and the strongest is March and November for home builders. This is versus the S&P. So that's interesting. If I just look at home builders by themselves, then July, clearly the strongest month. 100% of the time, home builders are higher than it opened. The close is higher than the open for home builders in July. So that's the big month, July and November, 100% of the time. Basically, that means, well, let's go back 12 years and make sure. It changes it a little bit and then move it back 1 month. Yeah, that's a good example of what not moving it back can do to the data, but November is still 100%. So November's the best month. July and March are two of the better months, 75% of the time. And in July, they are up almost 5%. So May is okay, up 2%, but June starts to trail off. Even though 58% of the time for both months, the close is higher than the open, it's only up 0.2% in June versus May. So that's how to use the seasonality charts. That's just something part of stock charts, and I put it right on my website, make it very easy. These little icons right here for any of these industry groups. You can see what the best months are. So that's what that looks like. All right, let's go back to where I started and take a look at the daily scan. So I'm going to first scan for optional bull candidates, and we've got a few. And Foot Locker. So we'll take a look at the chart on the left-hand side is the daily chart right here. It's way up here. You see how high it is. So it looks like they reported. Actually, it doesn't. I don't think they did report today. Something happened. Maybe they got a buyout offer. I'm not sure. That looks like a buyout to me because it's not earnings. So they may have got a buyout offer going all the way from basically 13 up to almost 24 today for Foot Locker. So huge move for Foot Locker. Medtronics, a little more reasonable. So it's starting to move higher, coming off the 21, but still below the 200 and the 50. And it is underperforming its peer group and underperforming the S&P. You see up at the top. So it is in a squeeze, however. I would call this a little bit risky. However, you could get into this and put your stop right down here at 84. So it'd be a very low risk move, only about $1 down if it reverses. But that one might be ready to go higher. Procter & Gamble is in the staples industry. Let's show what that looks like right up here. So their staples they reported already. Let me go back and look at Foot Locker. Yeah, Foot Locker reports actually the end of this month, May 29th. So Procter and Gamble starting to make a move, but it's got a lot of work, got a lot of overhead resistance to get through. Just starting to move higher, but not. I'm not sure I'd jump into that one. Tractor Supply is part of discretionary specialty retailers, underperforming its industry and underperforming the S&P. So even though it's in a squeeze right now, this is really not kind of chart I would want to put on my watch list. Verizon. Verizon is interesting. It's been up and down. Basically has a symmetrical triangle. If you just imagine drawing a line across the bottoms and a line across the top, you've got a symmetrical triangle. So the breakpoint would be when it goes out of the top or the bottom of either one of those. I did a whole session on Technical Tuesdays on patterns. You can go back and review that if you want to. It's underperforming the S&P. The weekly looks like it's got a hammer. Weekly, the sector is outperforming the S&P. That's communication services, but it is rolling over right here. So it's not with a lot of strength. So I don't really see anything in here that is one that I would want to put on my watch list right now. Let's look at the other side of that. Let's see what kind of bear candidates we get. Only 3. So Alibaba, which was the bottom of my top 10 list. So you can see Alibaba just reported today, actually, so they might have missed. And it's definitely heading lower, getting ready to go it's actually below the 21-day moving average. So could be a good short candidate. NIO, EV automobiles, also heading down below the 50 now and just slightly below the 21. It is underperforming the S&P and its industry group. So although the weekly is in a squeeze and looks like the momentum is trending higher. So I don't think it's going to break out that direction though. And then Peloton is the other one in the short side. And we're sitting above the 50, but below all of its other moving averages. And momentum is starting to roll over. So this one might have more downside in it, but not too many really in this whole list today. If I look at do the same thing with my top 10 list, see if there's anything else. Court is this is a pharmaceuticals, outperforms its group, had a big run right here. I'm not sure what that was. That was probably FDA related or news related. So it might be getting ready to make a run again. Needs to break out of this little consolidation at about 74. And right now it's at 73.37. So you might keep an eye on that if you're into the biotech area or pharmaceuticals. Might be an opportunity. That one starts to come back up. Progressive is in the insurance group. Not seeing too much of interest on this particular chart. And then Huron Consulting is business support services. It's in industrials, just coming down to the 21. And it reported back here, went down and then came the next day, went down and came all the way back up. So that is interesting when that happens. That basically means, so it's been in the top 10. So it previously was pretty strong. Another one that was similar to this that Tom Bowley talked about yesterday is this one here. Merex, which is in investment services. And he said that they had earnings today, and he said that it may sell off, sell on the news. And if they had good earnings, sell on the news means it would probably bounce back by the end of the day. And that's exactly what's happening. So if you had taken a risk on this one after watching Tom's video, for those that are subscribers to his website, you could have put a buy order in here at 42. It would have executed. The low was, let's see, the low was 41.85. So it would have executed at 42. And right now it's at 47.50. So $5.50 in just one day. That definitely would be a nice day trade for those that were willing to risk it. I did not, but I like watching these kinds of things to see if they play out the way some folks say that they will. And Tom is pretty good. So that one actually did play out. I'm sure he's going to crow about that. All right, that's about it for today. Hope everyone's doing well. I will update everything tonight. By the time you get this at 7 o'clock, it may already be updated. But hope everyone's doing well, and I will talk to you again tomorrow. Thanks.